Hey guys, Joe here from Charting Star. It's Thursday the 13th of July and I haven't done an update for quite a while. So today we are looking at the three major US markets, the Dow, the S&P and the Nasdaq, and also the German DAX. And this here is my tweet from last Friday, July 7th. I said the DJI is going for a big symmetrical triangle, SPX is forming a big bearish Wilbur wave, and DAX is forming a BT, which is a broadening top, also known as a megaphone pattern. And what do they all have in common? I gave you the answer a couple of hours after. They all are missing a new high. And now we are looking at the Dow Jones. It's a cash chart. It's a 2-hour time frame. And this is what a perfect symmetrical triangle looks like. I gave you that tweet right here at that low. And by the way, every pattern, also this symmetrical triangle, they all need 5 hits to be triggered. In this case, we have a high, which is the first point or the first hit. Then we get that low, which is the second hit, a lower high, a higher low, and another lower high. And here that pattern is triggered. And it's the same for every pattern. It doesn't matter if it's a wedge, a broadening top, any kind of triangle. It doesn't matter which one it is. We have this basic golden rule for every pattern. And now what do is you measure from the greatest height in that pattern, which is from that high to that low, and you get 878 cash points at the Dow, and then you're waiting for that third touch here on that upper trend line, and you take this one here. So this is basically the 100% move, and you put it right here, and then you end up getting 35,380 as a 100% target. The statistical target, which is also known as the minimum target, because the probability is much higher that we run into that statistical target, which is 58% of that greatest amount here of 878, and then we end up at 34,969. And I think I gave you that yesterday. We triggered that pattern here, and we gapped up, and we started buying within the first 2 hours, and then we started selling. After we hit that third line, you can expect a certain pullback. Even if we jump up right above that trend line, and that pullback here is actually normal behavior. It could be even bigger. We could even drop even further down here. What you can do is you can put like a retracement line here, so you can go for a 38.50 or 61 retracement pullback, or we could even go all the way down here, which I don't think is going to happen. And then you basically look for these higher targets. At the Dow Jones, by the way, he loves these symmetrical triangles as a consolidation pattern before he runs much higher. We're staying with the Dow, and what you see here is a daily chart based on the cash still. And I have to say, this is what a perfect inverse shoulder pattern looks like. And I know there are a few guys out there, and I actually agree with them, that these patterns, they don't like to occur at the top. Now, we have to clarify, is this here actually the top or not? Once we have a look on the daily, the top is actually here at that all-time high just below 37,000. And we were basically consolidating into October for like 10 months. And then we had that huge rally until December of last year. And that is still the top, by the way, at the Dow Jones. So the Dow Jones is the only one which is actually still consolidating for the last 6 months, while Nasdaq and the S&P 500 actually kept making new highs. Of course, that rally here was insane, and the Nasdaq and the S&P 500 didn't really participate in that. So it's actually the other way around now. All these value stocks are actually consolidating, and the growth stocks actually are going through the roof, especially the big names. So what I do consider here is that we had that huge rally, and this is part here of a consolidation, and now we got that inverse shoulder head shoulder pattern, and for me it's not really at the top. And just talking about that pattern here, we got an inner or the greatest height is 2,876. You measure that from that low of the head, and then whatever that slightly declining neckline is giving you, and you end up with 2,876 if you do it very precisely, like I do. And the statistical move is 71% of that greatest height, and you end up at 36,254, and the 100% move would be a new all-time high just above 37,000. And what I also should mention is that high from yesterday. We topped out at 34,586, which makes it basically a double top to that high we made in mid-June at 34,588. So they're only like 2 points difference. And once we have a look all the way down here to the 1st of December of last year, we hit 34,595. So it's basically in the same range. And in mid-December, we just had that quick CPI spike at 34,712, which makes it like 4 highs here as a major resistance. And I can tell you one thing, since that whole phase here for the last 6.5 months looks like a typical consolidation pattern. Once we actually break through these highs, there could be a very intense pressure relief to the upside. So these targets here, they could be seen much earlier than anyone could imagine. The only thing I got for the bears here is that upcoming bearish Wolver Wave wedge if we hit a higher high. So again, here we got 5 hits. We got the first, the second, the third. This is a higher high, a higher low, and we are missing another higher high somewhere here. But be careful, once we are breaking through that upper trend line, Dow Jones could accelerate, and as I said, these targets could be seen much, much earlier as anyone could imagine. And this is another very helpful tool to look at the Dow Jones while looking at the Dow Jones Industrial and the transportations at the same time, and you look for divergences. Like the red ones are the negative ones. So here's for example, the high in mid-December, and we kept making lower highs at the beginning of this year, and the transportations actually made a higher high, and then you see that sell-off we had until March, mid-March. And the other way around, the green ones are like a positive divergences. So here we made a low, we made a lower low, and the transportations did exactly opposite. We made a low and a higher low, and then the Dow Jones Industrials actually popped to the upside. And right now, the transportations, they keep making new highs since the beginning of June. The Dow Jones also kept making new highs, but now it basically topped out in that double top. And if we are very precise, because that high here is 2 points lower than this one, we are not making new highs yet, but the transportations are doing new highs. So that negative divergence is still present, but be careful, once we break up here, then that divergence, this divergence dies, and there could be a brutal move to the upside. Just keep that in mind. Yeah, this is our last chart for the Dow. It's a weekly chart, also based on the cash, and it gives you here basically just these primary cycles I use. And we started a new one here in mid-March, and we topped out as a half primary cycle in week 7, and we bottomed as a half primary cycle in week 10. And now have a look at that high here we made at the beginning of May at 34,257. This is basically the point which is very important. This is also where that neckline is on the daily, and a very, very basic rule once you use cycles. Once we get above it and we get a weekly close, which occurred already here and here at the end of June, we are running usually in a right-hand translation. But this time, yeah, it looks a bit tricky because these weekly closes, they were just above it, then we closed below, twice below that high. And here's where we got that symmetrical triangle I was showing you at the beginning of this show. So once we get a clear weekly close above that high, I'm pretty sure we run much, much higher at the Dow, and these targets for that inverse shoulder head shoulder pattern become actually very realistic. Be careful if, especially this week, if we fail to close above that high here, then we could be in something else, and that could be a very, very tricky left-hand translation, and we start our drop already. We are in week 18 already of that primary cycle, and the earliest the primary cycle could bottom, we had that, by the way, here in June last year. We bottomed in week 17. And the one after went also for 17 weeks, and we are already in week 18. But just having a look at these ones here, we bottomed here in week 22. We topped out here in the left-hand translation. So yeah, keep this area here. It's a major resistance. Once it breaks, I'm pretty sure we run much, much higher. But if we keep failing here, let's put it this way, the odds have been very good to have a massive drop also to the downside. So here we got the S&P 500 future price levels at the 4-hour time frame. Here is where I gave you that tweet where I said that S&P is going most likely for a big bearish Wilbur wave wedge. We got that thing triggered with that higher high over here. So again, we got a high, the first hit, the second, the third, the fourth, the fifth. And we got that pattern triggered like every other pattern, which I said earlier. And yeah, have a look at that major resistance at 76.4 retracement. It's from the all-time high all the way to that bottom in October from last year at 45.04, and give it a bit of room to 45.10 in case we get a little reaction here, or we even drop all the way down here at the S&P 500. Actually, I go for much higher target around the 46,000 levels before we start a bigger correction. That is just my buyers. And once we have a look at the VIX, here is the VIX on the daily, the future VIX, by the way. And this also is a very clean bullish Wilbur wave wedge. And this one here suggests that we run all the way up to these 34, 35 levels we had actually last year in October when we formed that bottom. But there's also some more room to the downside. My idea is basically that we hit these 12 or even 11 levels before that whole market is actually turning around. A little orientation, we just can duplicate that line over here. We put it on that third touch here, or that third hit, and they like to walk around that line before there's a major turn in the market. And even what we usually like to look at is that we get that divergence between the VIX and the price levels at the S&P 500. So what does it mean? We're looking, or we like to look for a rising VIX into a rising S&P 500. And then usually the top isn't far away. Yeah, this is a Nasdaq already. I don't have any more chart for the S&P 500 because my cash price levels broke down, and I don't see any cash levels since the beginning of the month. I wrote my broker already an email They haven't replied yet. I hope I get an answer soon. So next time I hopefully can give you a few more charts on the S&P 500. But let's come to the Nasdaq. It's a daily chart here. And you see in red here this bearish Wolver wave wedge, which I don't think is going to come all the way down here into that 11,000 area. Put your attention more on these retracement expansions. The 14,270, I was giving you also that mark on Twitter. It triggered actually a major run up as a minimum target of like 1,000 points to the upside to 15,250, which got hit here basically on the dot. We jumped up 30 points higher and then we got rejected, which was, by the way, another sub-cycle low here. And since we broke now clearly above the 127, the 15,646 is very likely. I had on the 1 hour time frame another expansion here, which we hit today very nicely. I think there were another 700 points you could participate in if you were following me on Twitter. And I expect another reaction here at the 650 level. And if we get a daily close above there, the 16,500 becomes actually likely as well. Keep that in mind. And we're also going to have a look at the volatility index of the Nasdaq, which is called the VXN. You also see that bullish Wolver wave wedge here. And you see these levels here, and they look like that they want to consolidate for another drop. But there are a few things we need to consider. If we drop below that low here or below that low here, what we would like to see is that we maintain that positive divergence. So we don't really get below that 38 level on the RSI. Or we keep making higher highs in the index at Nasdaq and we are not dropping below these lows. They keep these levels and then out of a sudden they keep rising into a rising Nasdaq. That could be also the case. So we look for these two opportunities, but I don't think this will occur in the next few days. Give it time until the end of next week or the following week. That is my rough assumption for a major turnaround at the US markets. So let's continue with the German DAX. You see a 4 hour time frame based on the cash, on the etc. And in blue, there's this hidden bullish Wolver wave wedge. The target line runs presently at 16,357. We broke clearly through that upper trend line, which is also the upper trend line of a descending broadening wedge. I'm going to talk about that in a minute. And this morning I mentioned we are entering that golden pocket here between 16,052 and 16,217. There could be a little pullback right here back to that trend line before we actually hit that target line. So far DAX keeps accelerating, and I keep mentioning that since the beginning of the week. Be careful with these small Wolver wave wedges, especially also on the 1 hour time frames. DAX likes to look very weak and then out of a sudden it keeps accelerating and jumps higher and higher and everyone is shorting into it, and you do nothing more than accelerating that whole move to the upside with shorting that market. And so we talked about that target line and that descending broadening wedge pattern. Once you take that upper line and you put it right here, so you make like a parallel line, you see that we overshot right here. So in other words, we have an expanding diagonal, which is also called a descending broadening wedge. We get a wider open wedge to the downside. And what you do here is you measure that greatest height again from that high to that low, which is 984, and this time you take 83% of that greatest amount, and you measure it from that third touch here, which was the fifth hit, by the way. Again, every pattern has 5 touches: first, second, third, fourth, fifth, and you end up with a statistical target, very ambitious, new all-time high at 16,862, and the 100% move would be at 17,030. If we take that whole amount, that 984. So here's that broadening top pattern I was talking about earlier at DAX, also known as a megaphone. And what we got here is that first hit. That was a slightly new all-time high we made in the middle of May. Then we got the first low, the higher high, a new all-time high again, a lower low. And now we are waiting for the third touch on that upper trend line in order to have that pattern triggered. And again, we need 1, 2, 3, 4, 5 hits for that pattern to be activated. There are 2 scenarios for me which could occur here right now. Either that broadening top is actually, as it's called, a top padding or topping pattern. We hit that line or even jump a little bit up here and we do a fake out, and then we come down here for a major correction into autumn. Or we do a little pullback and we run for these higher targets of the descending broadening top and this pattern. And once we have a look, we measure here from that low. Let's say we hit that line next week. We are talking about more than 1,000 points of a potential move to the upside. This move could also be triggered to the downside, of course, if this thing here turns out to be a topping pattern. But yeah, keep that in mind. If we hit that line, we get like 1,000 point potential. And then we could end up somewhere here, 17XXX. It's not my buyers yet, but I'm pretty sure we run, once we hit that line, we run a bit higher as well. And by the way, have a look at that 15,444. The low was at the same level, and once I zoom out here, this was exactly the 50% retracement of that rally we had since March. So we retraced 50% within 3 weeks, which was a very, very healthy move. So the potential that we run now much, much higher is actually there. So the correction here is, in my point of view, done. And once I clear up the chart, give me a sec. So I cleaned up the chart here a little bit, and I put a few numbers down and a few letters. And I start off with what most people see. They see this one here as the first leg, wave 1, wave 2, wave 3, wave 4, wave 5 to the upside. So if you know about Elliott waves, very basically, you know the third wave is the longest, which is the case. Yeah, then wave 4 shouldn't cut wave 1, which is here not the case. And then you have a final wave which got above wave 3, which is also like pretty much the same height as wave 1. But the problem I have with that last wave to the upside, that it didn't look like a finish to me. It looked like a corrective move. It looked like this ABC, and then for me it's like an ABC to the upside, and we have another ABC to the downside. So what I would rather do is I put wave 4 over here and put wave 5 over here if you want to see it as an impulse, that whole structure. So we have a so-called expanding flat correction from that high here, the first all-time high we made. ABC down as A, ABC up as leg B, and ABC down as leg C, which is also wave 4, and then the last push as wave 5 to the upside. But there's always a but. I want you to pay attention on these red letters, and once I zoom out, hopefully it becomes a bit more clearer for you. If you see what we just talked about, this here as a starting point of a new impulse as 1, 2, 3, 4, 5. Please tell me what that thing here is before. It doesn't matter really how you put it in here or what extensions you use or expansions you use. You can't really see it as an impulse. It consists out of pretty much the same length in price from here to there, and probably there's a third one, and then we have a typical ABC correction. In other words, it's gonna be a WX, Y, X, Z, and we call this point here X2. So we got the first leg here, W. The X we got in just before Christmas. Then the Y consists out of another ABC, which is again a corrective move. It's a three-wave structure. Now we have the flat here as another X, and by the way, the W got the same length as the Y, and the X got the same length as the X2. So now we are looking for the final leg, that to the upside, and then we got targets somewhere between 16,806 and 17,311, and the most extreme if we duplicate the first wave, which was wave W. And usually, if that thing is a whole correction again, we move up in another three-wave structure as wave Z. And once we zoom out even more, we come back to that big correction from the all-time high coming from late 2021. We still see this here as our first leg to the downside, as leg A, then B, which consists out of the WX, YX to Z correction, in other words, corrective waves. And then there should be the impulse to the downside as leg C, and that usually goes beyond that point. In other words, we see another low. That about Elliott. And by the way, this is here another daily chart, and also based on the cash, I gave you these Bollinger Bands, and I mentioned that last Friday or last Thursday. Whenever we jump out of these Bollinger Bands with the whole daily candle, and we were somewhere here and we opened and we dropped all the way down to that 50% retracement, I mentioned the VDAX, and the VDAX did exactly opposite on his Bollinger Bands. And usually when the VDAX pops out of his Bollinger Bands on the daily, it likes to mark a bottom. I mentioned that last Friday, by the way, and that was also another nice trigger. To even try here a little position. And now, of course, we are much smarter, but that is always a good hint. Once we have a massive drop like that, to also have a look at the VDAX. And while talking about the VDAX, there's another potential bullish Wolver wave wedge you see here in blue, but we need another low for that. If this is not the case, if this is not happening, have a look at that red trend line. We might make new highs at the index, but we make lower highs at the VDAX, and probably volatility starts to rise while DAX is also rising, and that could be another trigger for sell signal. As long as we don't have that, or as long as we don't go all the way down here to trigger that Wolver wave, and we have levels here from 2017 below 11, by the way, so it's not completely out of shouldn't be completely out of your mind that this could happen sometime here in summer. And we are already in the weekly. Here's that inverse shoulder head shoulder pattern, and as you can see, these targets become closer and closer. 16,679, we almost went there already 3 weeks ago. the 100% target a bit more ambitious at 17,500. And we're staying in the weekly with the DAX. It's my cycle chart, and here you see that last start of that primary cycle in March, like pretty much the same what the US markets did. Then we topped out in week 8 and we bottomed in week 10 for a half primary cycle bottom. The same as Dow Jones. Now we rallied for another 2 weeks and we topped out in week 12, which qualifies also for a primary cycle top. It was a bit tricky here because that close up here was slightly above that high we made in May, which is usually a bullish trigger, and usually a rally for another 5 to 6 weeks is the case. But DAX turned around and bottomed in week 15. And that actually could qualify for a primary cycle bottom. So we could have experienced here a new primary cycle start, and that would actually explain that vertical move we are having right now. The other case could be that we have a combination cycle in between 2 half cycles. In other words, that is the first part here, that is the second part, and the third part, but that would mean the third part would be very similar to that part, and that would mean we are rallying for another 8 weeks, which I don't really see happening. I rather go for a new start here of that primary cycle. We rally now for a week, 2, or even 3 weeks. We run into my major reversal dates end of July. So mark like the 21st plus minus 3 days or plus minus 4 days. If we are correcting into that period, there could be also the case that we run into the end of August. That would be my plan B. If we are not stopping that rally and we are running into a little retracement or correction low into the end of July. So that's basically my outlook. I hope I didn't confuse you too much. Leave me a like if you liked that video. Share this one, and I try to be a bit more regular on YouTube, but I think I said that at the beginning of this video. I was very busy. So subscribe to this channel and give me a like, thumbs up, and I see you next time. Bye bye.